We're gonna start.
Thank you, sir. All right, good morning. We'll call the September 4th, 2025 board meeting to order. This public meeting of the Philadelphia Board of Pensions and Retirement is being conducted in person in the board conference room at the board's offices on the 16th floor of the Pension Center. Pursuant to section 21-1503 of the Philadelphia Code, electronic recordings of this meeting will be made through Microsoft Teams conference technology and by an audio recording. All electronic recordings will be made available to the public online at the board's website without charge to the Please note that you consent to use such recording by attending to this meeting or speaking at such a meeting. Our first order of business today is a motion to adopt the rules that the board uses for our in-person public meetings that are electronically recorded. The purpose is to help ensure accurate and complete audio visual recordings of the meeting occurred and comply with the code requirements. Motion to adopt the procedures made and seconded. Any discussion? Hearing none, we'll go to the roll. Brian. Rashida. Approved. Marcia. Approved. Karen. Paul.
Approved.
Lee. Willie.
Approved.
Carol. Motion carries unanimously. Item 2 is approval of our meeting minutes from July 2025 meeting. The motion was made and properly seconded. We'll go to the roll. Brian. Sheeta. Approved. Marcia. Approved. Sarah. Paul.
Approved.
Lee.
Approved.
Billy.
Approved.
And Carol. Motion carries unanimously. I reach a motion to approve the consideration of 110 pension applications and 62 withdrawal applications made and properly seconded. Any discussion on this item? Hearing none. Brian.
Approved.
Sheeta. Approved. Marcia.
Approved.
Tara. Paul.
Approved.
Lee. Lily.
Approved.
And Cheryl. Motion carries unanimously. Section 4, case 4A. Motion to approve service connected disability benefits for Albert and Bruce Sanferi was made and properly seconded. Any discussion? 4A. Brian. Sheeta. Marcia. Tara. Paul. Lee. Lily.
Approved.
And Carol. Motion carries 5-3. Case 4B. A motion to approve service connected disability benefits for Jamie Brown was made and properly seconded. Any discussion on 4B? Hearing none. Brian. Sheeta. Marcia. Sarah. Paul.
Abstain.
Lee. Lily. And Carol. On 4B. Sorry, Carol, the next one. The motion fails 2-4 with 2 exceptions noted. For C, motion to approve the service connected disability benefits for Steel T. Carter was made and properly seconded. Any discussion on 4C? Hearing none. Brian. Sheeta. Marcia. Tara. Paul.
Approved.
Lee. Willie.
Approved.
And Carol. Motion carries 5-3. Case 4D, the motion to approve the service connected disability benefits for Matthew Stevens. The nephew was named and properly seconded. Any discussion on 4D? Hearing none. Brian. Sheeta. Marcia. Sarah. Paul. Lee. Willie. Motion fails 0-8. Case 4E, motion to approve service connected disability benefits for Mitchell Farrell was made and properly seconded. Any discussion on 4E? Hearing none. Brian. Sheeta. Marcia. Carol. Paul.
Approved.
Lee. Billy.
Approved.
And Carol.
Approved.
Motion carries 7-1. Case 4F, a motion to approve service connected to disability benefits for Richard Fitzgerald was made and properly seconded. Any discussion on 4F? Hearing none. Brian? Rita? None. Marcia?
None.
Sarah? Paul? Lee?
Aye.
Willie?
Approved.
And Carol.
Approved.
The vote was 4-4, and as chair, I vote to deny, and case 4F, the motion fails 4-5. Case 4G, a motion to approve service connected disability benefits for Brian Gable was made and properly seconded. Any discussion on 4G? Brian?
Approved.
Rashida? Approved. Marcia?
Approved.
Tara? Paul?
Approved.
Lee?
Approved.
Willie?
Approved.
Approved.
Motion carries unanimously. Case 4H, a motion to approve service connected disability benefits for John Graziano was made and properly seconded. Any discussion on 4H? Brian?
Approved.
Rashida? Approved. Marcia?
Approved.
Sarah? Paul? Lee?
Approved.
Willie?
Approved.
And Carol.
Approved.
Motion carries unanimously. Case 4I, a motion to approve the service connected disability benefits for Christopher Haynes was made and properly seconded. Any discussion on 4I? Brian? Rashida? Marcia?
None.
Sarah? Paul?
Aye.
Lee?
Aye.
Billy?
No.
Motion fails 0-8. Case 4J, a motion to approve the service connected disability benefits for Walter Henry III was made and properly seconded. Any discussion on 4J? Hearing none. Brian?
Aye.
Rashida? Marcia?
None.
Sarah? Paul?
Denied.
Lee?
Aye.
Billy?
Denied.
And Carol.
None.
Motion failed 0-8. Case 4K, a motion to approve the service connected disability benefits for Brittany Killian was made and properly seconded. Any discussion on the 4K? Hearing none. Brian?
Aye.
Rashida? None. Marshall?
Denied.
Sarah? Paul?
Denied.
Lee?
Denied.
Willie?
Denied.
And Carol.
Denied.
Motion fails 0-8. Case 4L, a motion to approve the service connected disability benefits for Anthony Lazaro was made and properly seconded. Any discussion on 4L? Hearing none. Brian?
Aye.
Rashida? Marcia?
None.
Tara?
Oh, I'm sorry. Brian, Anthony Lazaro?
Yes.
Oh, approved. I'm sorry.
Tara? Paul?
Approved.
Lee? Willie?
Approved.
And Carol. Motion carries 7-1. Case 4M, a motion to approve the service connected disability benefits for Edgar Melendez was made and properly seconded. Any discussion on 4M? Hearing none. Brian? Marcia?
None.
Sarah?
None.
Paul?
None.
Lee?
Denied.
Willie?
Abstained.
And Carol.
Denied.
Motion fails 0-7, 1 abstention noted. Case 4N, a motion to approve the service connected disability benefits for Lee Newman was made and properly seconded. Any discussion on 4N? Brian? Rashida? Marcia?
Approved.
Sarah?
Approved.
Paul?
Approved.
Billy?
Approved.
Sorry, Lee?
Approved.
Approved.
Motion carries 7-1. 4O, motion to approve the service connected disability benefits for a colleague, Robert C. was made and properly seconded. Any discussion on 4O? Brian?
Denied.
Rashida? Marcia?
Denied.
Tara?
No.
Paul?
None.
Lee?
Aye.
Billy?
Denied.
Carol.
Denied.
Motion failed 0-8. 4P, a motion to approve service connected disability benefits for Tron Lynn Lee was made and properly seconded. Any discussion on 4P? None. Brian?
Approved.
Rashida? Marcia?
Approved.
Karen, Paul,
Approved.
Lee, Billy,
Approved.
Carol.
Approved.
Motion carries unanimously. Case one U, a motion to approve service connected disability benefits for Noreen Peterson was made and properly seconded. Any discussion on four Q? Brian. Sheila. Marshall.
Denied.
Tara. Paul.
Denied.
Billy.
Denied.
And Carol.
Yeah.
Motion fails 0-8. This is for our motion to approve the service connected disability benefits for John Raskowski was made and properly seconded. Any discussion on four R? Hearing none. Brian.
Approved.
Sheila. Denied. Marshall.
Denied.
Carol. Paul. Lee.
Approved.
Willie.
Approved.
And Carol.
Approved.
Motion carries 5-3. Case 4S, the motion to approve service connected disability benefits for Austin Romero was made and properly seconded. Any discussion on 4S? Brian.
Approved.
Sheila. Marcia. Approved. Tara. Paul. Lee.
Approved.
Willie.
Approved.
And Carol.
Approved.
Motion carries unanimously. Case 4T, a motion to approve service connected disability benefits for RWB Sanders was made and properly seconded. Any discussion? Hearing none. Brian. Sheila. None. Marcia.
Denied.
Tara. Paul.
Denied.
Lee.
Denied.
Billy.
Denied.
Motion fails 0-8. Case 4U, a motion to approve the service connected disability benefits for Joe Solis Trupla was made and properly seconded. Any discussion on 4U? Hearing none. Brian. Sheila. Marcia.
Approved.
Tara. Paul.
Approved.
Lee. Billy.
Approved.
Carol.
Approved.
Carries unanimously. Case 4B, a motion to approve the service connected disability benefits for Jacqueline Y. Speaks was made and properly seconded. Any discussion on 4B? Brian.
Approved.
Sheila. Ashley.
Denied.
Sarah. Paul.
Approved.
Lee.
Approved.
Billy.
Approved.
And Carol.
Approved.
Motion carries 6-2. Case 4W, a motion to approve the service connected disability benefits for Jimmy M. Taylor was made and properly seconded. Any discussion on 4W? Brian.
Denied.
Rashida. Marcia.
Denied.
Sarah.
Yeah.
Paul.
Denied.
Lee.
Denied.
Willie.
Denied.
Motion fails 0-8. Motion for X, a motion to approve the service connected disability benefits for North Florida was made and properly seconded. Any discussion on 4X? Brian.
Denied.
Rashida. Marcia.
Denied.
Tara. Paul.
Denied.
Lee.
Denied.
Willie. Sarah.
Denied.
Motion fails 0-8. Case 4Y, a motion to approve the service connected disability benefits for Daryl Rollins, was made and properly seconded. Any discussion on 4Y? Brian. Rashida. Marcia.
Denied.
Tara. Paul.
Approved.
Lee.
Approved.
Willie.
Approved.
And Carol.
Approved.
Motion carries 5-3. Case 4Z, a motion to approve the service connected disability benefits for Stephen Card was made and properly seconded. Any discussion on 4Z? Hearing none. Brian.
Denied.
Rashida. Marcia.
Denied.
Sarah.
Denied.
Al.
Denied.
Lee.
Denied.
Willie. Carol.
Denied.
Motion fails 0-8. Case 4AA, a motion to approve the service connected disability benefits for Deanne L. Keeley was made and properly seconded. Any discussion on 4AA? Brian.
Approved.
Sheila. Marcia.
Denied.
Sarah.
Denied.
Paul.
Approved.
Lee.
Denied.
Willie.
Approved.
Carol.
Approve.
The vote was 4-4. As chair, I'll vote to deny, and so the motion fails 4-5. Case 4BB, a motion to approve the service connected disability benefits for Sharon G. Moses was made and properly seconded. Any discussion on 4BB? Hearing none. Brian?
Denied.
Rashida? Marcia?
Denied.
Tara? Paul?
Denied.
Lee?
Denied.
Will?
Denied.
Carol?
No.
Motion fails 0-8. Case 4CC, a motion to approve the service connected disability benefits for Casey Myers Lorden was made and properly seconded. Any discussion on 4CC? Brian?
I approve.
Rashida? Marshall?
Denied.
Tara? Paul?
Approve.
Lee?
Approve.
Willie?
Approve.
Carol? Motion carries 5-3. That moves us into section 5, case 5A. Listen to approve the application for survivorship benefits regarding Lois J. Eisern, the deceased, who's made it properly seconded. Is there any discussion on case 5A?
It's all correction, Jackie. The, the third full paragraph of the benefit option 3, there's a sentence that's misplaced in there. It said, began receiving a benefit an extra reduced rate based on surveillance information. That sentence is correct in the next paragraph, but it should not be that mentioned. Obviously, they can start receiving at that point. So it's like, well, it's correct.
What paragraph was that again, Frank?
The third non-indented paragraph
Begins with that.
starts with that same day.
Yeah.
Last line there says he began receiving a benefit at an actual reduced rate based upon, he did not start receiving it at that time, didn't start receiving something separate. So, which says in the next paragraph, so that the next paragraph is correct. That last sentence, last part of the last sentence is in. Should be crossed out from the word began to the word information.
Thanks for the clarification on the case. Sorry, Fran. Is there any other discussion on 5A?
Jackie, yeah, there's some confusion around this case with the paperwork. I'd like to make a motion to move this to a hearing panel. Is that up to the board? Second.
Revised motion was made to send case 5A to a hearing panel. Was properly seconded. Any discussion on the revised motion? Hearing none. Brian? Rashida? Marshall? Tara? Paul? Lee? Willie?
Approve.
And Carol.
Approve.
Revised motion carries unanimously. Section 6, case 6A, motion to approve the application for common law status regarding Sean Williamson, the deceased, will be and properly seconded. Any discussion on 6A? Hearing none. Brian? Rashida? Marcia? Carol? Paul? Lee?
Aye.
Willie?
Denied.
And Carol.
Yeah.
Motion fails 0-5 with 3 voted abstentions. Case 7A, a motion to approve the application for common law marriage for Edward Cologne was made and properly seconded. Any discussion on 7A? Hearing none. Brian?
I approve.
Rashida? Approved. Marcia? Sarah? Paul?
Approve.
Lee? Willie?
Approve.
And Carol.
Approve.
Motion carries unanimously. Section 8, old business, in case 8A. A motion to approve service connected disability benefits for Willie Brown with 3 year property submitted. Any discussion on 8A? Brian?
Denied.
Rashida? Marcia? Tara? Paul?
Denied.
Lee? Willie?
Denied.
Yeah.
Motion fails 0-8. Case 8B, a motion to approve service connected disability benefits for Kathy Lynn was made and properly seconded. Any discussion on 8B? Brian?
I approve.
Rashida? Marcia? Tara? Paul? Lee? Willie,
Approved.
and Brown.
Approved.
The vote was 4-4, as chair, I'll vote to deny, and so the motion for 8D fails 4-5. Please 8C, motion to approve the service connected disability benefits for Dan Purcell. The second was made and properly seconded. Any discussion on 8C? Hearing none. Hearing none on 8C, we'll go to the roll. Brian, Rashida, deny. Marcia,
Deny.
Tara, deny. Paul,
Approved.
Lee,
Proceed, I did not.
Willie,
Approved.
and Carol.
Approved.
The vote was 4-4, as chair, I'll vote to deny, so the motion for 4C fails 4-5. Case 8D, motion to approve the service connected disability benefits for Jane Ellen Henderson was made and properly seconded. Any discussion on 8D? Brian, Rashida, Marcia, Aaron, and Paul,
Approved.
You did good, I'm sorry.
or D.
Yeah, didn't.
Carried. Approved. Vote was 4-4, as chair, I'll vote to deny, and the motion fails 4-5 for 8D. Case 8E, a motion to approve the service connected disability benefits for Gilbert M. Hamilton was made and properly seconded. Any discussion? Hearing none. Brian,
Approved.
Sheila, Marcia, Tara, Paul, Lee, Willie,
Approved.
and Carol. Motion carries 5-3, and case 8F. Motion to approve the service connected disability benefits for Earl Smith was made and the second discussion. Hearing none. Brian, Sheila, Marcia, Tara, Paul, Lee, Willie,
Approved.
Carol. Vote was 4-4, and Carol votes to 9, so 8F fails 4-5, and that leads us into new business.
I'm sorry, yeah. On case 4-1. I'm giving a 2 different ages for the gentleman. It was already approved, I think with the age correct. He got 55 for the first, he got 67. So, thing with the exam.
Carol, Collins, Carol, worldwide.
Yes,
Ask Josh to take a look.
Carol, your question is,
they,
it's a 55, but that's 67 years.
which one is?
Yeah, we get clarification for that one.
Okay, thank you. There you go. I know, the paper gotta say which one.
And I just want to note that Francois stepped in. Can she is, please. We'll clarify that question, Carol. I'll
Okay.
jump in just a second.
I know.
You know, we have a Prachi Asadi that joined, work started on Tuesday. So she will be equity finance director. Working at the pension board, leading the modernization of the pension payroll system. I think there's a lot of preliminary work to be done.
Is she feel?
Oh, she's not in here. No, she's not in here. She'll be in here.
Yes. Prachi.
Well, Philly.
Yes. Yeah.
She'll be in here at the second September meeting to introduce her to the board. And that way she'll have a little bit of work under her belt. That she will really soon. There is a working group here for the modernization project. Brian volunteered on behalf of the trustees to be on that working group. We anticipate within the next 2 to 3 weeks, once we get a little bit down the road on this, we will start scheduling meetings for the working group. The idea is that Brachi, as we came in to right the ship on 140, and we can see 140 through to completion. Has a great working knowledge of the job of payroll, 140, every aspect that we are the end users. So she will assist us in ensuring that whatever system we end up with is able to use the data that we receive that we're the end user of, correct? So I think it's a great opportunity for us, especially given the recent technological advances that are out. We'll be able to take full advantage of that as a board. The board will be, of course, aside from driving and working with the board will be briefed on a regular basis, just so you know exactly what's going on. Progress and what's going on and everything else that's going on. So I think it's a good opportunity and I look forward to moving forward. The state audit is continuing to move on. They did come in for their online testing. We spent 2 days here reviewing files and online testing. We provided them with the vast majority of information that they requested. The only thing we're waiting for the city accounts, the official most recent for file, and I know RP information. So far, so good on that. There's an upcoming pension form. I know the elected trustees communicated with Rob about that. It's form was going to be at the Fed has a period on September 15th. So it's actually going to be hosted by the work school of business. It's the pension form. If you don't recall talking to Rob, I'm sure we care today about that. But it's on September 19th, and it's to get the word out on the health of the pension system, how far the pension system has come over the last several years. And I know that Congress people, state legislators, city council, state auditor general, other people have been invited to this. So it should be, again, a great opportunity for the pension board, for the city to get the word out there on the status of the pension. The NC PERS, you will see that in the materials. There is a conference coming up in October, legislative and the trustee education conference that's coming up. It's in Florida in October. And the trustee election, the ballots are done. The candidates are finalized and the ballots start going out on September 19th. There is a roughly 30-day period until October 22nd for the voting. On October 29th, in person at the Board of Pensions is the official count. I believe at 10 a.m. it's scheduled to start, but we will, keep you posted on that. She goes to September 7th, September. I'll get you go. If there's any pension form, so board members, the elected, so already used to accept the council members, state legislative leadership, and Philadelphia delegation, state auditor general, the local chambers of commerce, of course, Chiron and Marquette will be represented there, like the board and staff, congressional delegation, and Wharton students will also be there. There will be a Q&A. So it should be a little program. Should be a good program to inform people about the health of the pension fund, the history of the pension fund, and how far it's gone.
So this is on September
19th, then we could do more information about this once we get to
Are any council members going?
You're all invited.
Well, I don't know if
We don't know yet.
Thanks. Do we need a motion on the NC?
I'd like to make a motion for the NC to go first.
Yes.
I was secondly staff member or
The motion is made and probably seconded. Any discussion? Hearing none. Brian? Francois? Marcia? Terrence? Paul? Lee? Billy? And Carol?
So I approve the frame business. Do we get information on other avenues?
That's all I have. They don't have so much.
Yeah, so this will advance trustee study, which was first, and then you have, it used to be called public safety, but now it's called fall. But for this year, it's called fall, so Yes, it's gonna be done for this part.
Right,
So
so,
it's two parts.
so that'll be approved by the board, but that in context. So if you get to attend, you'll have that on. Now, on that case for why the age is 67.
I'm sorry.
The age is 67.
Okay, thank you. I will correct the,
We will correct.
Thanks. Before we do the litigation summary, Francois and Ellen, would you like to introduce, I'm not new again, relatively new member of
Oh,
the team.
sure. We have joining, the law department now has a pensions and finance division. uh, Which Dan Gordon has been a member of. He's now transitioning to another division of the law department. So we recently brought on, Christopher Hirakawa, who is here today. Who is, joining up. He is an assistant city solicitor. He was previously working in the airport division, been here for about a year and a half or so. And has a very interesting background in private practice. He did a lot of securities work, private equity work. So he's got a pretty strong background. So I think it would be very helpful.
welcome.
Thank you.
So first of all, can you tell me again what this unit does? It seems like everybody's on pension these days. I just want to know.
So, we, about a year ago, I suppose, the commercial law unit was reorganized so that we created, two new divisions. One of those divisions is called the Pensions and Finance Division. So that division, there were two attorneys slotted for that division, a divisional deputy to manage the division. It was originally, we wanted to have two attorneys in the division, but kind of ran out of money. And so there was only one attorney assigned to that division. So there's a divisional and one attorney. We hired, a guy named, Muckman Islam was the original divisional deputy, and Dan Gordon was the assistant city solicitor assigned to that division. Dan has decided to move to a different division, and Buckman unfortunately had to move back to Atlanta. So we kind of had to start all over again. And so that division is intended to handle the work of the pension board, and also the municipal finance transactions, that and a few other things represent the treasurer's office and banking transactions and stuff like that. So we are now trying to recreate that division. I believe that the chief of the unit is going to be making a recommendation for a new divisional deputy to be brought in, hopefully soon. You're welcome. Sorry. Oh, right. Is he? Oh, there he is.
He's here.
He's here.
Oh, he is here. Okay, so, as all of you know, Adam Coleman has been working, huh? He's come, well, actually, no, it's the opposite direction. Adam is actually leaving the law department. Next week will be his last week here. And, I, personally want to, thank Adam for all the work that he's done. Adam was my intern. He was at Drexel Law School.
Oh.
Absolutely the best intern that has ever walked the face of the earth. And we were thrilled when he joined the law department. And he has just done an excellent job with his entire, just about 10 years with the law department. I know the pension board was appreciated all the work that he did for the board. And we are going to miss him greatly.
Congratulations. And thank you.
And thank you, Dan. for-
We go.
Yes, yes, thank you.
Where you heading to? The Board of Pensions for the Presbyterian Church.
Oh, my gosh.
Yeah, right down the street.
Oh, wow, really?
There. That's all right.
Congrats.
He's on the board with me.
Kelly?
Gosh. Pat, is Pat still there? Well, we'll talk after.
Okay.
Okay. There are a lot of people I know who've left and gone there. Interesting. IBS and around, yes.
To just add to what Francois said, pensions defined insurance does not do benefits. So Ellen does benefits along with an assistant, so that's something that's work in progress. So that's the vast majority of the work that's done for the pension. The other work is contracts and investment. So it's actually somehow bifurcated. Working on that with Rob. See where that gets. Okay.
And on that note, Ellen, is there anything on litigation summary of note to highlight?
We have a lot of appeals and we won a lawsuit on preliminary judgment, so that's great. That's all. Great, good work. And with that, motion to adjourn is made and really seconded and we'll move into the third comment.
Then we need to break down, we can take a break for lunch. Okay, all right, let's take a 5-minute break, we'll come back.
next item is approval of our meeting minutes from July. A motion was made and properly seconded. Hearing no discussion, all those in favor, Christie, Brian, Francois,
Approved.
Marcia,
Approved.
Sarah, all, really, carries 7-0. We'll note that Carol's not yet here. He was listening to the bird plan update.
Jackie, Mario covered in free activity for.
Good morning. Deferred compensation plan ending balance as of July is $2,219,331,652. It's just about a $20 increase over the month of June. Plan participants, total is 27,515. That's 80 more than the month of June. Participants, actively contributing is 20,729. That's about 35 more than the previous month. New enrollments, were a little bit down at 184. Year to date, from January to July, it's 1,639 new enrollments. And when I compare it to the same time period over last year, it's about 25% increase. 401A plan assets are at $5,079,193. It remains pretty flat. Plan participants, no changes from previous month at 1,444. Philadelphia Parking Authority, plan participants 668. We did receive 5 new enrollments in July. And Philadelphia Housing Development Corporation, 48 plan participants total with 1 new enrollment. The Rock balance is at 114.2 million. Number of participants contributing is 9,622. That's 76 more than the previous month. The Roth utilization is now at 35%. And then the percentage contributions continue to rise at 3,172 participants, 68 more than the month of June. Number of call volumes did go up. In July, we received 10,496. That's 266 more calls than the month of June. This is normal because of the statement time period of received by participants. And then online accounts, 21,975, which is 95 more than the previous month. Number of participants with online accounts is now at 80. Do you want to say questions?
Not even, where is the little over 2 billion? You said 20% increase in that.
No, 20 million. This is
Where's the 2 billion rank us now? Similarly sized like pension?
question. I would have to
You know,
go
I
back
mean,
to-
I'm not answering, but I'd be curious to know that.
Yeah, in terms of all our plans.
Yes.
Yeah,
Yeah, that's, I mean, it's easy.
it's a pretty big,
That's-
yeah,
And the participation ratio of employees is pretty high.
it is.
I believe you said that before.
Yes.
That'd be good information.
I'll follow.
Thank you.
Morning, everybody. Just reporting out on the activity from our team, Christina and Don, month of July. 27 group events and workshops, both comprising of virtual meetings and in-person seminars. A total of 610 attendees across those. We did a handful of new employee orientations with 309 attendees, of which 263 were not enrolled. We did gain 133 enrollments from these events. Don, our CFP, provided 4 webinars through July, investing risk and rewards, Social Security, Medicare, and managing taxes, totaling a little over 300 attendees for those events as well. So we have another very busy month for our local team, helping support to help grow the community.
Any other questions for the board? Just everybody.
Thanks, Jackie. You'll see starting on page 4, there's a brief summary of our markets. Some of the things we'll talk about
And I can't work in talking about previously about what happened with equity and bond market in the second quarter. But in terms of the fund itself, 8 of the 22 funds with 3 and 5-year periods ranked above median, 12 of the 20 ranked above median, either the 5 or 3-year period. We have a few recommendations and a couple things we just wanted to discuss briefly around peer ranking through some of the absolute terms. In terms of the recommendations, Eaton Vance, we believe, should be placed on watch. Recent performance has trailed, ranking for the 3 and 5-year period. This is one of the things I'll talk about in a minute. On an absolute basis, net of fees compared to its stated benchmark, it has outperformed. So it's a situation where on an absolute basis, it's providing the benefit of participants net of fees, but compared to other funds in the space, it hasn't ranked very well. We also note that going back just 6 months, the manager ranked above the one showing how quickly peer ranking and such. So again, we believe that based on watch, may have additional recommendations in the near future if we want to see improvement. Similar story for Drew Jennison, recommend being placed on watch, ranks below median for the 1 and 3-year period, though we know the 5-year performance remains strong. Again, showing how quickly some of these funds and comparisons can change. We're back to December 2024, just 2 quarters ago. Manager ranked 11th in the universe for the quarter, 44th for 1 year, and 12th for the 5-year period. Goldman Sachs is probably the one where we have the most concern. We'd like to conduct a search for the next either by the end of this month or certainly by the October meeting to ascertain what other options may be available for better fit for participants. Very, very poorly over the quarter and 1-year period and below median for 3 years. Again, why we want to take a look and we're not sure what recommendation we come back with. 6 months ago, they ranked 8th for the 3-year period. 6th for 5 years. So you can see the volatility. What staff wants to be careful of is that any recommendation we make shapes of performance or that the manager that happens to do poorly over a short time period may not be a better position. That's kind of leads into what we wanted to discuss about peer rankings. I think they're a useful data point. They should be considered, but ultimately it's the net of fee performance, what's accruing to plan participants. And you can see some examples of managers that don't have on watch or didn't make recommendations on. Luminous Sales, which is one of our bond funds, was ranked below median 3rd quartile for 1, 3, and 5 years, but has outperformed the benchmark net of fees at all 3. The Vanguard Wellesley Income Fund ranked very poorly this quarter, but still outperforms the benchmark net of fees by a small amount. What's interesting is, at least to us, is they outperformed by 10 basis points this quarter, ranked 91st. So for 1 year, outperformed by 7 basis points, and they were top quartile. So again, showing, looking at the initial trend, how typically these things can change. Dodge and Cox outperformed by 20 basis points for the quarter, and ranked 29th. Yet, when you look at a 1-year period, they actually outperformed by 542 basis points, and the ranking is slightly up. So again, want to keep the peer rankings in mind. They're important. We also, and I believe, talked with Rob about this briefly. We want to make sure if that does this regularly that we're comparing the funds to the correct benchmarks, depending on what software provider you use or what geography you look at. Not everyone uses the same benchmark. So we're always checking to make sure that for providing for any of the spare.
Thanks. And you don't need any action from us, so we can.
As long as, if now, as long as no one has any objections to us looking and coming back with a recommendation. That, at that time.
I guess my concern is, and I appreciate the work you did, my list will be, because last year we had a different state of the union than we had this year. And I think, I think the new state of union and the way they fluctuate with the market is causing some of the downside or side of the matter, but I'm in favor of looking and putting something on watch, but I think it's being caused by, I'm gonna say the union.
Yeah, I don't disagree that the market volatility, and some of the actions that have been taken are quickly reversed, or in some cases unanticipated effects, and we'll talk about that a little bit during class, and then are causing some of the whiplash or issues. And that's one of the things, yeah, we want to make sure that if we do come back and recommend the manager gets replaced, we don't want to chase for them. We don't want to look at a manager that maybe has struggled a little bit in the upmarket, but will be much better positioned than the end of the market pulls back. So we don't want to, kind of leave or go in and out of funds that are persisting a long time.
Yes, I don't know if you'd be able to figure it out at some point. So look at the targeting funds. Almost a 2030 targeting fund, there's so much that than the most other targeting. It's gotta be some coincidence. I mean, there'd be no reason for that, right? It's like 5, 3, 8, so much better than the other plans. Gotta be some aggregate.
We can certainly take, we can certainly take a look at that. I don't have an answer, immediately for that, but we're happy to come back. See if we, we'll drill a little bit and see if we can find out what makes, that particular time period so much better, for the life cycle.
You could just shift them out on the outside.
Page 13. Any other questions on this item? Moves us into the money market.
The Vanguard money market report from the second quarter. This is the fund we staff users for the board to collect revenue, pay to the plan, pay appropriate expenses for the company. The balance as of June 30th was just under $123,000. Any income coming into the accounts made up of participant fees, fee rebates, and other interest income that's earned by the account. We earned roughly $2,971 for this whole quarter. The complete plan expense year to date was $27,000 for the first reason.
Next, question from the board. We're now more than the first committee meeting on human investments.
Good morning, everyone. Agenda item 1 is approval of minutes from the July meeting. Probably seconded that the minutes be approved. All those in favor? Ask you to vote. Exemption. Motion carries. Thank you all very much. Item 2 is proxy guidelines. Thanks. Good morning, Rob. So the proxy guidelines, you should have received, the red line,
clean copy of what the property guidelines would look like if approved today. You recall, Maureen Ryan from Eagle Marco was here a couple meetings ago to review the annual shareholder activity and to make some recommendations. So there's three spots where we have updated the guidelines in accordance with Maureen and her team's recommendations. The first is on page 17 of the clean copy. And it's at the bottom of section 4.10, political spending. This addition to the guidelines, we note that proposals, the companies encouraging board oversight and disclosure of corporate political spending and lobbying, including third-party activities and inclusive of trade association spending will generally be supported. While proposals may be opposed to take issue with corporate charitable support of organizations that work on behalf of issues that align with the company's stated values. It also adds section 4.11, which I know has been discussed briefly at the table in different contexts around artificial intelligence, noting that proposals around disclosure on the use, risks, and opportunities associated with AI will generally be supported, as well as proposals asking companies to engage with and inform workforce on the development of AI technology will also be supported. There's then a one sentence proposed addition on page 25 at the end of section 9.03. Goes to the dual or multiple class common stock. That notes that proposals that provide for disclosure of voting results broken down by share class when there's a multi-class structure, that will generally be supported. So that would be the example I've used is for Meta or Facebook, where there's class A shares. Make this number up, but let's say with the class A shares carrying 10 votes for every share of the class B stock. We'd like to see those results displayed to see how the majority owners or the folks with the class A stock, if they're not aligned with the stockholders in the common stock, class B stock. And then the last addition is, this would be a new section on page 43. This is around workforce and human capital, how it's managed. Note here, companies that consider their workforces to be an important asset around delivering financial results should manage the workforce and human capital as much as tangible assets and financial assets. Proposals that help investors better understand how companies handle risks and opportunities around their workforce, including proposals that ask companies to assess the effectiveness of workforce policies and practices, workforce demographics, and reporting on workplace safety, pay equity, improved transparency, and workplace standards for their suppliers and generally supported. So those changes or additions, those three sections are in line with presentation Maureen gave. If these changes are approved, we would then update, finalize the guidelines, and then those are what we would operate under and what we post in public.
So is this a new way of addressing diversity, equity, and inclusion?
I think it's an additional way. It doesn't change any of the other. This is additional reporting margin. None of the other sections on DEI, ESG, equity and inclusion has changed. This is simply an addition that specifically deals with workforce development, etc. But it does not change. It will not lessen any of the actions that are taken elsewhere by pursuant to the policy. Other questions?
Their motion to approve the amendments.
Next motion, that would be recommendation in by the.
Second, moved and properly seconded, all those in favor?
Aye.
Opposed? Thank you, motion carried. Thank you very much. That takes us to broker report.
So this is the second quarter, 2025, the first woman and local owned, brokerage report. As a reminder, on an aspirational basis, managers are encouraged to direct at least 35% of their trades to qualifying brokers under this NWDP or within purpose. In total, on the equity side, 51% of the qualifying trades in the second quarter went to local minority and women firms, and year to date, 58% of the trades that belong to these firms, with Ariel at the highest for the second quarter, 20%. And you'll see year to date, all the managers ranked really strongly, especially I think when we look at a couple of past quarters, the lowest we have is Causeway at 28, which of course we bargained. Emerald up to 34, with Shaughnessy at 34. So again, really strong numbers here on the equity side. Third page provides, as always, the breakdown amongst firms, seed trades, and then the fixed income side on the final page. There are a couple notes here. The 4 of the 6 managers good shape or ahead to the 8. I would note for Longfellow, these are 24%. Their July trades, which received a preliminary update, 60% of their trades in July went to qualifying firms. So at the end of that month, they're now to 32% year to date. MetLife, Kristen and I had a call with them Monday. That's the biggest concern. The number has dropped pretty significantly since 2024. It's also because of the amount, if you look at the total principal that was traded, it was over half, so 476 million change of the total principal out of a total of 870 million. That's why you see the numbers total drop, even as most of the other managers are more fast and it's right? But that the number was short. So we will have a report perhaps as early as intermediate part of notes following that. We have worked with them before. They have brought their numbers up in the past. That was supposed to drop from where they were prior to. What were they last year? I could give you that after the meeting. I want to say 20s, mid-20s. And there is, we've discussed with them, and I think we've discussed at the table, they're not the fund where we have the most the core plus strategy, but in other strategies they run. The numbers can sometimes get a little bit skewed depending on exactly what they're trading, and some firms don't do trades in that space. But I don't think there's any reason based on the tax practice that you can have. So we did again as soon as next week, and because
Okay. So they traded a total of 476,000 million, and they only traded 38 to the open minority.
yes, for the second. We were trying to ascertain why that is. Based on the past results, we have a call scheduled, as I said, Monday. This is not where they've come in the past. Again, I'll let you know right after. I think it's more like 20% or 20 to 25%. past quarters and past years. So that this sort of reflects, this sort of surprise staff when we saw it.
Any other questions? Let's move to asset allocation.
Lakewood and Haley are walked through, most of this. I did want to just, probably, I know most of you folks noticed, but on the record, we will come back at the September 25th meeting with one additional stress test, that will be related to extension of the Liberation Day market reaction. We will also come back with 3 or 4 other asset allocation scenarios, what they would look like and why would gender help being wrote. So that.
Let's see, look at some of these books. Wow, that really is good.
Possible.
You don't want to reach out.
It's unlikely.
Look at them.
I think it's unlikely based on the initial analysis we've done, but we will bring this back at the September 25th meeting. But this, that part of it, slightly. With that, I'll turn it over to Eric.
Great, and the September 25th meeting, I just wanted to let you know, I got permission to say this, so Haley won't be at the meeting. It's Haley's technically last day, but she's not leaving. She's going on leave. So, you want to give a quick announcement?
Yeah, I wonder what it is.
You always put it, but, so I'm having a baby doing, getting a November, so this will pass. I'll still be around. Chad will go down the floor.
Great, so with that, jump into the asset allocation review. And I know you have it in your binders. I think you guys also have the book, right? The book. So in the printed book, this is going to be under exhibit 2. And the goal here is to be super high level as we look at them periodically. So we will take any questions you have about the way to get a market list that we need. But on page 2, on the printed book, under exhibit 2,
That rationale for you.
yeah, the rationale for today's review. The goal here is really just to get.
I was coming, hear no question.
The goal is to go through the rationale for today's review. So one of the things we want to do is look at the asset allocation, but not in an academic, abstract way, right? I think we can look at numbers, we can talk out mean variance, we can talk out Monte simulation, we can talk out trials and assumptions, but it's also good just to see how the asset allocation is actually doing in real life. So as we talk about the asset allocation, and as we've done really since 2016, we've spoken about a couple of things, which is really just minimizing as much as possible any downside, participating in upside, and deviating from the types of returns that we saw in the plan prior to making changes in 2016. So this review is also going to be a proof statement with respect to the performance of the plan relative to the asset allocation and the assumptions. So that's page 2. Page 3 quickly gives us a snapshot of where we were in 2016. We keep on going back to 2016, not to be nostalgic, but really comparing the deliberate course and the board class system with its oversight has led to a pretty meaningful change in asset allocation in certain segments of the portfolio. For example, we had MLPs, master limited partnerships in the portfolio. We had BDCs, business development corporation. We also had specialty options in the fund. So we pivoted away from that strategy and that style of looking at the portfolio, more of an endowment foundation type model, to what we consider to be more of a corporate action. So what's in the middle points to where we were, and then what's in the right hand side points to.
So that the model we've gone to has less volatility or predictability.
Yes, it's been, even though it's been exciting because of everything going on, it's still been a lot more reasonable, predictable. The return streams are less esoteric and more your brick and mortar, looking at stock, looking at bonds. When we go into alternatives, those alternatives are very explainable. So we're able to say, look, this is how they make money, and these are the risks that we're facing versus some of the other strategies that were more esoteric in nature, had multiple layers of risks, and more opportunities to get surprised.
But yeah, so
Correct. The market was surprised even with the index one. So the fact that we've lessened the degree of surprise, I think is helpful.
To that point concerning risk, so the delegates such as you have, for example, in the product lists, in recent months and years, due to and that's not investment. So and it was improving that we made make the transition from the admin to or professional district.
we have more cheaper states here, actually, it's been that right.
It brought fees down, made transparency that much greater in the program. And then ultimately, on the left-hand side, we see the asset allocation as of 630. So it just gives us a sense of where we were, what's been approved, and then the transition to the approved asset allocation. So beginning on page 4, what we do is actually start taking a look at the portfolio across different market. So we had, I didn't want to trade celebration. So we had,
I thought it was there.
yeah, it was me late at night with Haley, because actually, those things that then Chad had a possibility.
Since everybody said everything's in the direction.
Yes. Fighting chess and everything. But I would say going back to Liberation Day and the market's reaction to Liberation Day, we think it's going to be helpful just to get us into how the portfolio performed in this stress environment, right? This is an actual stress environment we went through. It's an opportunity to see how the portfolio did. There's also the fourth quarter of last year where there was the post-election hangover, where I think folks started to internalize and realize what the election victory meant in terms of trade policy and potential changes. So ultimately, we also saw a sell-off during the latter part of 2024. And then we also saw a pretty strong fiscal year in spite of all of the noise in the market. So getting a sense of how we participated as the market recovered and as the market moved upside. So pages 4 and 5 really just give us that preamble. And then page 6 gives us the 4Q24 period. So 4Q24, we did see, again, 100% of it was in the final quarter, negative results. And those negative results on page 7, you'll see that the overall fund composite was down 2.4%, but other areas of the market were down significantly.
What protected us against those big decreases?
So private markets, so your private equity allocation was actually very helpful for us in terms of cushioning the blow. Our real estate, real assets was also very helpful. Non-US equities were also helpful. And then your investment grade fixed income was also helpful to some degree as well. And it actually shows in the relative performance of the benchmark we're taking a look at. So the Odyssey index, for example, as well as the Barclays aggregate index are two examples of that. We don't have the private markets listed, but the private markets absolutely, as we can see on page 6, private assets gave us 1.2 positive for the quarter, but you'll actually see other areas were pretty negative. So non-US.
Private assets really whatever factor you look at it.
Yeah, they've been a good source of upside participation, downside protection. And in fact, I'll tee this up for Chad and Haley to also just provide comments as we talk about private markets, because there's a lot. When you pick up the Wall Street Journal, Bloomberg, talking at dry powder, it's very hard for these funds to make money, realizations, be worried about a big bang, a big explosion. I would say that the type of private markets that we've been very deliberate in investing in have focused on the middle market to mid cap, middle market to small cap side of the market, and the dynamics there are very different. So I'll kick it to these two very quickly just to give an overview of how we're different from some of the headlines we're hearing about.
Yeah, I would say private markets, obviously, private equity in particular is very broad. It's obviously performed very well for the plan. I think we remain to be selected within private markets, focusing on managers that have been generating cash flows, distributions. And actually, if you take in the recent years, contributions that the plan has made to private equity versus distributions that we've received, we're ranked in the first, or you're ranked in the first quartile relative to peers. So I think continuing the strategy of focusing on middle market managers who have distributed through different periods of time and kind of staying away from some of the news and noise in the headlines where distributions have been tough and just focusing really on specialists being selective has proven to perform pretty well for us. So we're going to continue to focus there.
Just to put a finer point on the maturity of this portfolio, if you look over trailing 5 or 10 years, the average distribution is coming back to the plan for this portfolio. It's been like 140 to 150 million, depending on the time frame per year. And the last 10 years have been net distribution versus what is actually called down for managers that are actually investing. So just reflecting its mature portfolio that's providing that stability, regardless of what's going on in the macro environment.
Just one thing, Haley referred to the news, noise, and headlines. We all obviously know that on a local level. And I appreciate the elected trustees drafting that response to the misleading op-ed. Because that is news, noise, and headlines, greatly misleading and not representative of the portfolio that this board has put together. So thanks for saying that. It's reminding me of that.
Yes, there are some managers definitely that are struggling in this environment and, feeling really good about the exposure in this portfolio and sort of how distributions are playing out this year and looking for the rest of the year as well.
I just wanted to mention too, because I think this is one of the data point that shows the action we were in the state that we're working. You would often, when I first started, you would always ask about the upside and downside capture. And I kind of promise every 6 months or a year, you're eventually going to see it turn around. You're going to see it. Well, if you look now at the very end, that was the next stat or at 5. In every one of the areas of the portfolio, with the exception of the 2 that we're still exiting or trying to get out of, opportunistic fixed income and absolute return, all of those there's either even in the private markets or for all the public markets, we exhibit at least 100% of capture and then less downside capture relative to what the manager and the classes provide.
And overall,
Yes, so, I just think that's another data point or another slide that just shows the changes, the fee savings, the predictability, the limiting some of the asset classes that we talked about. It just demonstrates that the approach.
With that, we'll turn to page 5. So we went through the 4Q 24 period that was sell off at the end of the year. Takeaway is there was a market sell off. The portfolio was very resilient, meaning we did better than before the market, and the diversification asset allocation was very helpful for us. So on page 8, we go through a more extreme version of the sell off we saw in the 4Q. But the end of 4Q was really the market acting on what would happen post inauguration. 1Q25, we've had inauguration day. It's actually digesting what's happening in real time. And we'll see, for example, areas of the market, particularly on the equity side of things, US equities selling off. However, the global low vol deposit held up well for us in terms of being protection on the downside. Other areas of the portfolio, including fixed income, also held up well for us. So 4Q, we pointed to private markets holdings. 1Q, we're now looking at equity allocation. Some of the active managers holding profits. So this is really, I think, a good proof statement on asset allocation working well for us and not overly relying on one portion of the portfolio to do all the heavy lifting. So we can see for the 1Q period, the composite was down, but again, relative to the broader market was down close to 3 times that amount. We held up very, very well. So downside protection coming Now, the good news here is, it's not all doom and gloom. So on page 10, you'll see that the market did rebound. So the end of April, actually pointed to, good period of performance for the markets. And you'll see that during that market rebound, certain parts of the market rebound, particularly the international side, our portfolio was up. So even though we have US equity exposure, we have more of a bias towards the US equity market, it still held up better than the broader market, meaning that we had value added from our active management as well as the asset allocation. So at the end of April, we were at 90 basis points. You'll see that the components on page 10 of the US equity market were actually negative. The other thing that did also help, don't want to take too much credit, was also getting a good chunk of cash in the portfolio as well. So the cash injection also was very, very helpful. So that's part of the overall pension reform strategy. I think that dovetails nicely into the path that's been set, transparency, the private markets that we're playing in, the passive exposures, the active exposures, even on the traditional side. Everything has worked pretty well in tandem for us. And then in a moment, we'll talk about the asset allocation, the transition to the group asset allocation, also the timing of that, also of some credit. So reporting to you all, looking at rebalancing the fixed income, staying in cash, all of this is added to the story that we're looking at.
On the cash decision, just want to mention that, Chris was a big advocate for the cash position. And that's not an easy position to advocate for, because if you do make that move and then the equity markets, people start to question why you cash. But so it's a difficult decision to make. It was a great decision. It's a gutsy decision. So Chris, you get out of it.
I appreciate that, but Tyro and a lot of other folks on the team do a really good job, managing risk load, managing the cash, providing updates. It was actually something I was going to touch on. We have about $313 million in cash as of this point, paying a little over 4.2%. Jackie was nice enough to send or resend. We'll be getting additional cash before the still have the Act 205 money coming in, which is about $100 million actually by early next month. And then we have about $85 million coming in from the water department with a couple other various funds. So having folks stay on top of that and the way they do, managing cash, which also includes making sure you have enough money not only for benefits, but if you do have to pay a private equity, capital call, they do a really good job of that. It's my job, it's Marquette's job this year. But we should appreciate the time.
Well, we instituted that when we had to create the spreadsheet. We help with size language and now.
Yeah, no, it's a team effort, and right now I think in spite of the market run up, cash remains a relatively strong place to be, especially if you think the market is the equity markets are undervalued.
Turning to page 12, this also gives us the bigger picture. On page 12, this gives us the bigger picture. So one of the things we always point to is the non-symmetrical nature of returns, right? So if you end up losing 50% of something, you literally have to return 100% to get to your starting point, right? So the focus on losing less on the downside is key, because it means we take less risk on the upside to get back to the starting point. I think the fiscal year to date numbers include these cruise statement. On page 12, you'll see that the fiscal year to date number, this 1 year number, is 12.2%. So that's a pretty healthy result. If you think about the fiscal year to date number, it's actually taken out an average. Versus the June 30th number, fiscal year to date number. It's taken into account all those dips that we've just mentioned. So the market's gone up tremendously, but it's also gone through some corrective periods, like 4Q as well as 1Q. But you can see that we're still on top for the 1 year period, 30th in double digits, and that has been steadily gaining when the market's been up. not giving back as much when the market's been down. And that's evened out to a pretty good result for us. So on page 13, you see
It's like equity and US equity, non-US equity, the biggest.
yeah, non-US FD in particular during the latter part of the fiscal year, as a result of the dollar depreciating, the sell-off that took place when tariffs were essentially announced and rolled back, the non-US market really did well. But I think not to take away from the US market, our US market exposure also exceptionally well for us during this period as well. So we actually did see some pretty encouraging results from the active managers as well as the passive exposures. So across the board, I think we were pretty, I don't even want to say lucky, we were well prepared for this environment. And we'll always take a little bit of luck as well, but ultimately the active managers, the passive managers, everything within the asset allocation worked in our favor. So a strong fiscal year for us. And right now, through the end of August, we're up around 2.4% of the fiscal year. So a lot can happen between now and June 30th, 2026, but we already have a pretty nice cushion into the fiscal year. So if we can continue to do better than the market to go and participate in upsides, it's also a good head start for us as we think about the fiscal year. And on that, page 13 takes us to fiscal year performance. And we have two benchmarks. This is actually pretty good to take a look at. So we have a cash adjusted benchmark, which takes into account the fact that we are in a very enviable position where we receive a lot of cash every year. So we want to make sure that we're also looking at cash adjusted benchmark, right? And you'll see that the cash adjusted benchmark is a more conservative overall policy benchmark. We continue to outpace that both in up and down environments. So again, some nice protection coming in from our active managers. And then page 14, Haley and Chad just went through a nice overview of our private markets program. And 14 continues to reinforce why from our end, continue to look at private equity as the area we want to get that illiquidity premium. The illiquidity premium basically means you are holding up to cash, right? And you're not going to get your money on a daily basis. You're going to get some type of premium. There's going to be some type of upside for giving someone your money for an extended period of time. And looking at the numbers here, we continue to see through projections as well as actual realized results. The private equity side of the market continue to see stronger benefits from that liquidity premium. So you'll see US buyout, which is the area that we focus on the most. That's the area that we continue to focus most of our efforts as we think about private. And then on page 15, it takes us to, once again, the current allocation as of 6/30, the approved allocation. So this was what was approved in the fourth quarter of last year, but we had to transition a lot of cash into fixed income. We went from a significantly lower allocation to fixed income to increasing our fixed income allocation. Why didn't we do it overnight? Interest rates, volatility in the market, making sure that we're not, catching the wrong end of a trade. And ultimately, with cash earning over 4%, we're in a pretty good position where we could really take our time. So you'll see that right now we're at 25.1% of that 28%. Two fixed incomes, we're pretty much close to target. You see on the private market side, we have a little bit of an underweight, but with that being said, we have potentially two pending allocations that should get us closer to that target number. So all in all, from an asset allocation standpoint, we continue to track targets very well. Where we are overweight, it makes perfect sense. A lot of that's been relative to health performance, but where we are underweight, we're waiting to redeploy capital at the appropriate time. So nothing within this asset allocation from our standpoint points to any recommendable changes. The other piece of good news here is, this time next year, we'll be revisiting the asset allocation. It's what it means for us. So should there be any thoughts or changes in the next 12 months, we would look to ultimately incorporate those recommendations. But right now, no recommendations are being put forward for the asset allocation.
Couple of things One, can you talk about the current allocation is actually showing a higher return, but also higher volatility? Can you talk about how you think about that trade-off? And then also, what we're trying to improve allocation, the average annual human return is actually below our assumed rate of return. And I know there's an explanation for why they did, but you talk about both those things.
Yeah, absolutely. So for the current allocation, we have a little less in fixing, and we're a little bit more overweight some of the risk-seeking portions of the market, for lack of a better term. So you'll see broad non-US, your non-US equities have a huge run-up, and that huge run-up has led to a little bit more of an overweight. So relative to the approved allocation, which has less in your non-US equities and more in fixed income, that would explain the relative drop in some of the numbers we just.
It makes the question. Well, why is that improved allocation there for us than the current allocation which doesn't actually return?
Yeah, absolutely. So I would say that the approved allocation, when all is said and done, the approved allocation is still within projected returns and hitting percentiles and probabilities and so on. It still gets us to that 7.25 and above. The mean, or I should say the 50th percentile return is 7.4%, and that we've brought down the standard deviation. So that notion of taking less risk, being mindful that we've had, again, this enviable position of seeing the funded status increase. We're getting cash coming in. We're lowering the discount rate by 5 basis points on a pretty continuous basis. So the trend has been towards more conservative allocation for the portfolio, and acknowledging that trend that we've been on, this approved allocation continues us down that path.
You talk about the 7.1 versus 7.25.
Yeah, absolutely. So the 7.1, and I would say that the 7.1, it will be understated a little bit, for example. So within our asset allocation, we have US small cap core or non-US, right? Our actual allocation will have a little bit more of a tilt towards your non-US small cap as well as your US small cap. So the projected return are actually a little bit more conservative. But ultimately, the 7.10, it's not assuming any alpha. So it's just the returns we get from the asset classes. So if we were to say, all things considered, we're looking at 15 basis points net fee returns coming from our active managers. That in itself is a very conservative estimate. So this is what we expect from the asset class exposures. Once we add on active management, and we think about the illiquidity premium, the private markets program, what we've actually seen in terms of the private markets and what it's contributed to returns, we continue to feel very confident with this asset allocation hitting the 7.25. Outside of the active management or the alpha assumptions, going back to the distribution of returns. And what I can do here is actually just jump very quickly to the back of exhibit. Exhibit 3, and on exhibit 3, we'll jump to page 6. What we'll see here are the distributions of returns for the current allocation as well as the approved allocation. And you'll see that the 50th percentile return is 7%. The 75th percentile return is 1.1%. The 95th percentile return is 11.3%. So there are quite a few scenarios under the current allocation that continue to favor, just from an asset allocation standpoint, the approved allocation proportion. So wanted to also just mention that as another reference point. Correct. And the other thing here is, as we look at the asset allocation on a very frequent basis, if for any reason there's a seismic change in the capital markets where projections change in such a dramatic fashion, because we discuss this so frequently with you all, this is something that wouldn't catch us by surprise. So the fact that we're already transitioning from the approved allocation, we're almost there. The fact that we could potentially look at another 5 basis point dip in the discount rate following, how we do, the next fiscal year. Again, everything is set up, directionally the right people. But that really just, again, reinforces the no recommended changes, at this point. But, as time goes on, we'll continue to update you and look at what would make sense. But the change to fixed income, that was a pretty material change that we made at the end of 2023. We're now, at the tail end of that, and we don't think that this is the right point in the cycle to deviate from the strategy we've been working very well.
Do you have any idea what percentile on return has been the last handful of years? Has it been 50? Has it been less? Has it been more?
Oh, in terms of return?
Yeah.
Oh, it's been significantly more than the 50. Put it on the 20, rather than gas, I'll agree with you. So we're looking at, we've been, because we just got 12.1, so the 95th percentile would give us a good
So
indication.
7.1 is even more conservative than 7.4, obviously.
Yes.
7.4 is a 50th percentile. I'm gonna guess 7.1 is about the 10, 15th percentile.
Yeah, so, so it'd be, maybe like
47.
Yeah, 46 something. So still, yeah. Still within the realm of something that can happen, but because we have active management, because we placed a lot of bet on the old 53. The 7.1 is extremely, so it's just assuming passing class returns.
And especially based on our experience.
Correct. Based on the experience, here's a real life example of what asset allocations may miss, right? The real life example may be we get, 600, 700, 800 million in cash. That cash is yielding better fixed income. Fixed income is going through a lot of volatility, and ultimately we're able to navigate that in the best way possible. So the downside has been significantly less. So these are the things that I would say pushes more to the 95th percentile, while at the same time we want to be more conservative when we think about expected returns and so on, because our goal isn't to
I know you don't want to overshoot the assume rate too much. That's not right?
Right, it'll be helpful to ask specifically where it ranks. If you take that trailing 1 year period with the reporting have for DB plans, billion and above, it's the 8th percentile of the period you actually have. Again, that's 1 billion and above public plans for the trailing.
It's good. Can we, Chris, there be some sort of footnote in there where it says 7.10, just so we want to have an official document where the board is satisfied with not needing the assumed rate return, something to.
Yeah, I know it's in another spot, but we can, it's definitely in another spot.
Yeah,
The next page, I want to say.
Yeah, the next page on page 16 actually says, the return assumption for the approved allocation do not include other assumptions, the other line.
Rob and I don't have no page.
And then up to it says additionally, this shows on page 6 of the full asset allocation study, the 50th percentile return for the approved allocation. Exactly.
The official cost.
You can do that. I believe, as Chris mentioned, next month we will come back, not to recommend any new asset allocations, but just to stress test the current allocation, and then some other mixes where, again, to really just get ahead of some of the headlines and so on around private markets. We're also going to model out some scenarios where we have private markets allocation. We're not going to do that in real life, but we want to show the value that's been brought by private markets. And then we also mix out to zero the private markets allocation. And what we'll actually see is, I think, what the numbers have essentially proved over time. Private markets have been additive for us in the portfolio. They've helped us on the downside in stressed environments. They've helped us in up environments. And by lessening the private market exposure, it would actually add a lot more volatility to the portfolio. And also from an expected return standpoint, we would fall drastically below the assumed rate of return.
So you lose return and add volatility.
Correct. Lose return and
Is that what we'd like to do?
Yeah, even I would say, oh, I don't do that. So you don't want to overshoot, you don't, you still want to hit that target rate.
One more thing on the private markets piece, what isn't assumed in the assumptions is fees. That it's a conservative view of fees, and you all have done a really nice job of driving those fees lower in private markets. So that return assumption doesn't really factor in that piece of the portfolio, the co-investments that you're doing alongside your primary allocations. So that's one other point I'd put in there.
I think this is it for you.
So quickly noted the estimates through the end of August, which we received earlier this week. He also mentioned, but it's worth reiterating, the prior fiscal year returns has kicked off slightly from the initial estimate, 12 to 12.2. That's been primarily due to private market data, that started to come in, thereby few things going on in the market, that we're keeping an eye on, that some of them are concerning. Great was point having a large cash position is helpful. Coming back from Labor Day, the market seemed to take a renewed interest in budget deficits. I think that was largely triggered by the second court ruling saying that the tariffs are largely illegal. And what the bond market took from that is the $500 billion or so dollars that was supposed to partially offset the tax bill and spending bill would not be there. So we saw not only here where 30-year bonds were up around 5%, but similar story in Britain. Their 30-year bond is actually at 5.6. French bonds were selling off. A lot of volatility in Dutch and German bonds too. So we're seeing this story kind of play out in a lot of markets. We also see increased short positions in funds and ETFs that are tracking long-dated U.S. bonds. Again, with inflation and the threats to Fed independence being chief among those concerns. We've seen a lot of much higher projections for gold. Gold is obviously had a huge run up. But we see folks now, large banks saying, reputable firms saying gold is as high as $4,500 an ounce. There was a data point I saw that only 1% of the US bonds that are privately held, just 1%, that all that money went to gold, you'd be at 5,000. So only one of every, $100.
That's got to go there.
Yeah, so, there's continued worries about the consumer, particularly at the middle and lower end of the market. 6 straight months, visitors declining to Vegas. The Wall Street Journal article on Disney World, kind of a 2-tier experience that has developed. I had a chance to read that, kind of represented how Disney and other places are increasingly relying on just like the top 1 or 5% of consumers, and what that could mean long term. Many American companies, like there's been really strong earnings, but if you kind of look underneath, it's not really because of consumer spending, it's because of AI, but increases in productivity gains and squeezing costs down. So again, you can only do that so much. Consumers there to give up the slack. I would not expect to see earnings continue to go up. We see junior entry level job listings dropping. Market's still pricing in a September rate cut, which Chairman Powell seemed open to in his last meeting minutes. But again, got the threats to Fed independence. We may have a court ruling by Friday on whether the governor that was fired by tweet will keep her job and government COVID now. And there's also a hearing, I believe, today. The Fed's under to get their Senate today. With all that going on, core PCE went up 2.8% in June. We obviously had the large downgrades or corrections to labor forecast. I think they were historically downward in June. Same time, wage growth did go up. And the dollar has increased in strength in July, but had declined between last 6 months. So with all of that being said, the fund was positive in July at 30 basis points in line with its benchmark. Just two managers, one of which we talked about previously, Mackenzie, and we have a scheduled formal update here, September 25th in the October meeting. That's probably the manager because of the most concern and formal update on coming. Ernest has struggled, but for reasons I believe are explainable. They are not buying some of the more the riskier in small cap or cap space. There's not going a certain point in the risk curve. So I would expect them to trail when the market is sky high.
That's what we want.
Correct. So while and they still over a 3-year period are exactly in line with the benchmark, but there's no doubt that the recent one has hurt them. I think staff and I are concerned about that yet, certainly someone that I would keep an eye. Mackenzie is the one that I think we have the most concern about. That formal update on schedule. Then, for the staff report, I did want to get staff to answer the question that was asked about. In the second quarter of 2024, they had 28% qualified trades.
So much higher.
Much higher, and year to date at that time, they're at 20%. So they basically gone down year to date by half, 60 to 70% for the quarter. So there is something going on there, and that's again why the 12 schedule. Then just to close, the staff reports 193,000 change in total securities lending income per month, northern of no change in fleet. And over 56 months since the program started. Local and diverse AUM combined for 63%. Women and correct. A lot of that, attributable to equity and, equity managers and hospitals. The MWDB managers was their own category, 53%. Philadelphia. Remaining schedule for the year is September 25th meeting. Today, October 23rd. And then November and December meeting. Scheduled. We were internally looking a little bit at December 4th, but I would get it's taken, but sooner in the calendar line. It was helpful for everyone involved. Yeah, said no, the one that's normally combined, Carol, but not for December. We were looking at the 4th, but again, there's some of the other options. Everyone's schedule and staff, exactly ready.
You should make that too.
Board.
No, send me that.
The fourth. The fourth.
Before we do it, you should make it before things are not the country. That's, what is before?
Yeah, I mean, I'm the conference, but I'm sorry, I still listen, I don't do the best. Yeah.
And that's in the morning.
I see it, I would not.
Any other new business? But we will check on, let's check the calendar and get back to it. And it's the fourth. We also look at the third.
December.
Yeah.
The third was the third.
Third.
The week.
30th December.
This was the week for David. The third.
Wednesday. So let's tentatively put it there and when.
For the third.
For the third.
And that meeting of the December meeting.
Yeah.
And the checks for December are going to go out, maybe, any idea?
About the smoke. Okay, exactly.
Okay.
So.
Fred, one question. September 25th. And I didn't see our data situation, that means it's not something that I can do, should we?
And I think totally you can just designate audiences.
Yes.
So yes.
Yes.
And
Anything else on the calendar? Any new business? Old business? And it's really representing the attorney, we are adjourned. If you go forward. We will motion to approve the next.
Second.
Seconded, all those in favor? Aye. All those opposed? Motion carried. Any new business? Old business? Moving on to your adjourned. We'll see you later.
Yeah.